The midsummer slump is hitting an already slow market. I'm Tony with Clarkson Santoro, and this is our real estate update for the week of Friday, July 18th. We know that selling or buying a home can be very stressful and confusing. That's why we do these weekly videos so you can know how the market is impacting your options as a home seller or buyer. Starting off, we like to look at how the market did this week. There are now 84 homes active on the market, which is a significant jump from the 75 we had last week. Average asking price is almost identical to last week, even with all the new inventory. 2 homes went pending, only half the number that we had last week. The average asking price on those pending homes was a bit higher at $2,187,000, up from the $2,005,000 of the average for last week. 6 homes closed last week with an average asking price that did jump up significantly to $1,900,000, up from the $1,502,000 we had last week. So now that we know how the market performed, we like to look at the broader trends that help us know where the market might be heading. But as always, before we do that, if you do find this information helpful, why don't you hit the subscribe button down below? That way you won't miss out on future updates. And while you're at it, you can share this with a friend so that they know how their market is impacting their options as well. All right, let's take a look at those broader indicators, starting with inventory. It jumped up significantly this past week. It had been bouncing around the low to mid 70s for the past several months now, or a few months at least. But this week has changed that. Inventory levels are now in the mid 80s. And what's more is there were only 2 pending sales this past week. With that jump in inventory and the dramatic decrease in the pending sales, our turnover rate continued to drop off even more this week. And we're now sitting at about a quarter, or just about a quarter, of what we like to see in a normal, healthy market. It's not abnormal to see the turnover rate drop towards the end of summer like it is right now, but seeing as we were starting in a already pretty sluggish turnover rate for the past several months now, this drop is pretty bad and it could get worse. While the first 2 metrics moved in a negative direction this week, the over-under number actually improved slightly. It wasn't by much, but the number is still landing in the under range, but it went from about 28,000 under asking to just 20,000 under asking. This stat held out longer than I thought it would throughout this year, staying well above in the higher or over range longer than I thought it would, but it's finally catching up, and we're seeing the effects that a drawn out, slower market can have on home values and offer prices. Speaking of home values, the average sales price has also fallen this week. The 30-day rolling average is now below $1.9 million for the first time since the beginning of the year. Oh, that's there, beginning of the year. Now, I don't think that home values have dropped 8% on a house-by-house basis in the past 2 months, like the 30-day average numbers would seem to suggest. Rather, what these numbers point to is that higher-priced homes are no longer selling as quickly or as often, so the sold houses are primarily in the lower end of the market. That will continue to drive the average sales price down, likely through the end of this year. The triple Q continues to be the one consistent positive stat in the indicators that we track. I think that if this fund and the stock market as a whole started to lose value, we might start to see the bottom fall out on home prices. However, even if that were to happen, I think the more immediate effect would be that homeowners would just stop selling and wait for the market to improve, and that would tank the amount of inventory and start to hurt both sellers and buyers. So the sustained stock market value is just kind of holding our market from free fall at this point. The interest rates continue to increase slightly again this week. Every time there's a little bit of a downturn in the momentum, the interest rates quickly bump back up. I won't go into this much more. I have said it enough. The higher rates will continue to be a primary reason why prices drop, but also a major reason why there are fewer homeowners even considering selling, which is making this year an almost record-breaking low sales volume year. The middle of the summer vacation always brings a much slower market. This year didn't really feel like it could get much slower than it already was, but here we are. Middle of July and the already slow market is jamming on the brakes. I think we are going to be in for a long, slow fall and winter. So if you are considering buying, I would pick from the homes that are currently available. I wouldn't count on your options expanding anytime soon. And this is a good opportunity for you to start with a more aggressive offer. This is a market that finally feels like it really is a buyer's market from top to bottom. Thank you for joining me for this weekly update. I hope it helps you understand how our market is impacting your options. Don't forget to hit the subscribe button and ring the notification bell so you can stay informed on how this market continues to shape up through the end of summer. And if you have any questions about how you can navigate the stressful and confusing process of selling or buying a home, leave a comment down below. We're here to help guide you every step of the way. Have a safe weekend, and we'll see you next week with a new update.